Hey guys, Credible Crypto here with a new Bitcoin update. This video is specifically going to focus on Bitcoin. My last market update was from a couple of days ago. We talked about Bitcoin, we talked about a number of altcoins. Most of the positions on those alts that I talked about in that video haven't really changed, so there's not really much to cover there, which is why this video is going to focus exclusively on Bitcoin. Very, very big development here on Bitcoin that I want to talk about. I think the implications are pretty significant and it will affect the market as a whole. So let's go ahead and let us jump right into it, guys. So some of you may recall this tweet that I shared on Twitter. Again, I had outlined 3 scenarios in my last YouTube video that I thought were feasible for Bitcoin to take from current levels. And just to give you guys a quick recap, the idea was that in the first scenario, which I called the Ultra Bull scenario, we had a 1, 2, 3, 4, essentially a lower time frame uptrend forming, and we had this fifth wave that I said may not yet be complete. And in that scenario, the reason I call it the Ultra Bull scenario is because if that fifth wave is not complete and if it was extending, meaning going to be extra long basically, the idea was that the pullbacks from there should be shallow and we should continue up quite aggressively. In that scenario, we would have expected the time for this correction to be similar to the time for the corrections in the prior 2 moves down. And the depth should have been relatively shallow. The idea behind an extended wave is that momentum is so strong, so powerful, that instead of this completing the 5-wave move to the upside, this one little leg, you get an extension and you get 5 smaller legs to complete the 5th wave, which ends up being super long, basically. In those extended waves, because the whole idea is that momentum is so strong, you don't expect such deep corrections, right? So I tweeted that despite us not having hit the actual invalidation for this idea, for the extended 5th, it's pretty much as good as invalidated right now because the depth of this retracement indicates that momentum is not quite there. Again, if this was going to be an extended wave as pictured, the depth of that correction should not have gone so deep. So this Ultra Bull scenario is essentially invalidated. Okay. Now this sounds bad on the like if I were to just say it, because Ultra Bull sounds super bullish, and if that's invalid, well, that's got to be bad, right? But the implications are actually quite good. What it does mean is we have to be a little bit more patient for us to take off here. But the other implication is that the move that we get up is going to be more sustainable, right? So I also shared a chart on Twitter that if we get this Ultra Bull scenario, just continue to climb up from 71K with, not much of a pullback, then once we complete this 5th wave, we have to be careful of a much more aggressive pullback. And that's simply because once you get an an extended wave that is finishing a larger structure, and I would zoom out to the macro to show you guys the larger structure, but the idea being that maybe we had, just very briefly, maybe we had a 1, 2, 3, 4, 5 structure completing, then the subsequent pullback to that we would see after this extended move could be very severe and significant. Maybe a pullback back down to 62, 63K because it was never tested. Maybe even a pullback lower, which would be allowed because we'd be completing a much larger 5-wave move to the upside. So that was it's kind of like a double-edged sword. We had aggressive continuation, but what followed might have been a more aggressive correction. Now that scenario is invalid, we're left with just a couple of scenarios, and both of them, one of them, which I think is more likely, means that we're going to get a much more sustainable, stronger uptrend to the upside to follow. So let's go ahead and talk about the last 2 scenarios that remained. We eliminated 1 out of the 3. When I initially made the video, I said of the 3, there was 2 that I thought were most likely. They were both the more bullish scenarios. The more bearish scenario was a break below 60K. I said that seems like the least likely scenario. We've now invalidated or eliminated 1 of the 2 bullish scenarios, so we're left with 1 bullish scenario left and 1 bearish scenario. And I strongly believe that the bearish scenario is the least likely to play out. So for all intents and purposes, I do think that our bottom is probably in here at 60K. Okay, I do think that this was now our bottom. I've seen enough in terms of what I wanted to see on this move to the upside. We had a lot of change in PA up here that took place between 70K and 66K, and I'm going to talk a little bit about that. But initially when we pushed into 70K, I was saying this is main resistance. This is where I should be cautious. And so I was leaning a little bit bearish there for a pullback. Ideally, we were going to get a pullback to 62, 63K. We'll talk about that here in a second. But things have changed sufficiently enough to where I think there's a higher likelihood that this did in fact mark our bottom, that we're not going to see a pullback back down to 57K or even below that. And we'll talk about all of that here. So the 2 scenarios, we'll go over the bearish scenario. We'll go over the bullish scenario first, actually. So the bullish scenario, of course, has us starting the impulse off of 60K. We now have a completed 5-wave move to the upside. Again, we eliminated this as an option. So what we have now is a completed 5-wave move to the upside. Okay, our first potential impulse of a much larger impulse to the upside. This is why this video is so exciting and why I wanted to get it out as soon as possible, because if this is the case, then 60K was our bottom, and we have a chance to get positioned here before the next move to $100,000 plus, okay? So this is official invalidation. I'm going to change this from origin of impulse move. I'm going to change it to invalidation of bullish scenario. Okay, and this is where we want to stay above. Okay, anything above this level at 60K is fair game technically, meaning 62 to 63K is still potentially, we can still potentially test it. There's no guarantees, of course, and again, we'll cover that here in a minute. But this is our official invalidation. Okay, that's the bullish scenario that we've started an impulsive move to the upside, and now that we can confirm that this first leg is done, what we're seeing now is the wave 2 correction. What follows the wave 2 correction, regardless of how deep it goes, is a much larger wave 3, 4, and a 5. Okay, if our first wave up went from 60K to 70K, that's a $10,000 move. We expect the third is typically larger than that, and the fifth is equivalent. If the third extends, then the fifth is typically equivalent to the first. Bottom line, though, is that wherever this 2 ends, we can expect at least, again, if this is $10,000, at least $20,000 of further upside from wherever this correction ends, okay? If this correction ended at 66K, then we're looking at minimum 86K for this next completed impulse to the upside. Again, more likely that's going to push into the 90s, likely even potentially the $100,000 level, okay? That's why I'm so excited about this current move, because if it has started, then we're in for a hell of a ride over the coming days. Now, keep in mind that the entire time that we've been in this consolidation, I have reiterated again and again and again that what we are seeing is not distribution, it is reaccumulation. Had a couple of people on Twitter that were adamant that this was distribution. We've now made it back to the range highs, and I think this is, again, reaccumulation for the next major leg to the upside. I've had a lot of questions about how do you identify reaccumulation versus distribution. Guys, they are very, very identical in terms of what they look like. If you're just looking at the consolidation in isolation, oftentimes what looks like distribution can be reaccumulation. What looks like accumulation can be distribution. So you have to use context. You have to use context of where we are in the bigger picture to understand when a consolidation is accumulation or distribution. Okay, so again, I've had many people saying that this is distribution, that Bitcoin is distributing at 70K and we're going to come down for a major correction. And I've stood by the idea that this is not distribution. This is consolidation before the next major impulse to the upside, the next impulse that will mimic what we saw here at 40K to 75K. This $30,000 move is another impulse that I'm expecting that looks very identical to what we saw here. Probably even more aggressive, because again, as we start moving up here, we're going to go more parabolic. We're going to go more aggressive into our blow off top. So this is again, I think we're finally reaching a point where this reaccumulation has likely completed with this impulse. And I'll talk a little bit more about what else I'm seeing besides the impulse that makes me think that in a second here. But we're going to talk about this lower time frame stuff. We'll then jump over to a high time frame chart, and I'll make it very simple for you guys. But on the lower time frame, the stuff that I'm actively always looking at is these types of movements. If we can identify impulses, remember we identified this impulse back here at 38K. Some of you guys may remember, it's on my Twitter. I have tweets that show this. And so when we were consolidating here, I said, okay, we got our first impulse in. That means that we've probably finished this correction, and I'm now looking for 5 waves up, and we got exactly that. We got 1, 2, 3, 4, 5 waves up. And so we were bullish. If you're following me, we longed to Bitcoin here based off of this impulse. Same idea here. We're now seeing an impulse. Now, this one doesn't start off the absolute low, which is a little bit tricky, right? Most people who are new to Elliott Wave, to understanding things, expect these impulses to start off the low. And over my 7 years in this space, and I've talked about it frequently, I've realized that impulses can often start kind of in mid-air. And I've talked about this in prior YouTube videos literally years ago as well, because we've seen this over the years. Impulses don't necessarily have to start at the absolute low. And so that's kind of what we have here, basically, is what I'm getting at. Lower time frame impulse has now completed with 5 waves. If this is correct, then our reaccumulation that has been going on since March 6th is now complete. We should get a higher low on this pullback. Anything above 60K is fair game technically. I will talk about more about where I think is most likely for this pullback to complete. And then we should expect another major impulse to the upside of at least $10,000 for the third wave, another sideways correction, and then another impulse to complete this next 5-wave move that should take us to $100,000 plus. So back down here, we'll go back to the lower time frame, guys, and talk about what I'm seeing here in the lower time frames. So for a while now, or for the last couple of days, I should say, I've been saying that it makes sense for us to see a push into 62, 63K. Okay, it still does make sense for us to see that, but some stuff that I've been seeing on the metrics are telling me that we may not get a dip that deep. And the reason that I say that is because remember, we were looking at these lows to be swept. These are higher lows, liquidity resting under these lows most likely is what we would think. We have another leg down that just barely missed this low. Again, this was the ultra bull invalidation that we barely missed, but we have another higher low here. And so normally I would think, okay, all these higher lows are likely to be swept, right? It's very tempting. These lows look very juicy into a very key area of demand. And so normally I'm thinking, well, we're going to sweep these lows sooner or later because they're all building up and there's got to be liquidity resting below these levels. So this is probably most likely, and then we take off, right? Now, obviously, something like this would be the best for everyone because it gives everyone a very low risk to reward entry for the next $30,000 move to the upside. Imagine getting this sort of move means that you can enter along on Bitcoin with a stop at the lows at 60K, which is the origin of this impulse, and you'd be targeting, again, a $30,000 move to the upside. Let's just say $90,000 to be conservative, right? That's a nice 8-hour trade, low risk, super clear, ideal. This is everything that you'd want in a trade. And because of that, it's precisely why I think it may get front run. Well, there's other reasons too, which I'm going to talk about here in a minute. But this is the golden trade. This is the trade that I dream of. A clean impulse, a retracement deeper than 50-60% gives me a tight entry with a tight stop loss, and especially in an environment like this where we're so bullish, with a target that much higher. I mean, this is the ideal entry. This is the ideal trade. Which if you get it, you take it, no questions asked. You manage your risk, of course, so you know how much you're going to lose if you get stopped out, but this is a no-brainer long. However, what I've been seeing here in the lower time frames makes me think that we may not get that ideal entry, okay? So that's what I'm going to talk about now. So recall in my last market video update, we talked about the absorption that we saw between this low and this low, right? We saw spot absorption between these two lows. And we're seeing the same thing once again between the current low and this low right here, meaning you have a lot of buyers that are stepping in, passive buyers that are absorbing all the sell pressure into this zone, right above these highs. Remember, if we trigger the 65K highs, we probably triggered the 64K highs, and at that point we should ideally get a liquidation flush into the area where you'd expect buyers to be waiting. But if we trade above these levels and we never trigger these stops, right, then that avoids a flush down into this area of interest where you know buyers are waiting. What we're seeing here is absorption at these lows right above these lows here. And sometimes I wonder, like, you know, why is this the case? Why do we see situations where we kind of avoid all these lows that we've built up? I mean, obviously this is ideal, right? Why not force price lower to load up here? I think it's a psychological thing because the way that I look at it is if I'm a big player that wants to load up as much Bitcoin as I can, and I understand that, well, 62, 63K is obviously the area of interest. Now, one thing I want to add here, guys, is I use these supply and demand zones to identify areas of interest, but you can look at this in a million different ways. You can look at this using high volume nodes. You can look at this using methods that I don't personally use, but value areas or whatever, you know, some of these order flow guys look at. You can look at this chart in a million different ways, and you're going to get this 62 to 63K zone being significant. No matter what method you're using, it's going to show up as an area of significance, as an area where it makes sense to be a buyer, okay? Because of that, some more sophisticated, this is just my thought process, but maybe it gives you guys some insight into how I think. Because of that, more sophisticated players understand that this is a clear area of demand. And they maybe understand that there's probably a lot of buyers waiting here. So they probably also realize that if price does get flushed down into this zone, you're going to get a bunch of buyers to step in that are going to buy the crap out of Bitcoin. And if you're trying to accumulate as much Bitcoin as you can for the next $30,000 move to the upside, the last thing that you want to do is to trigger a flow of a ton of buyers to buy up all that Bitcoin, right? If you know that you have buyers waiting here, you want to get in above them. You want to get in before them because you know that if price gets forced down here, then they're going to buy the Bitcoin, not you. So what do? You front run the obvious level to buy, you front run the sweeps, and you start absorbing Bitcoin a little bit higher. And that is my theory as to why I think sometimes this happens where we just avoid these lows, because it happened back here from 3K to 14K. And everything, I feel like, I don't keep a trading journal, but I feel like everything that I see over the years is just stored in my head as like a trading journal that I can just pull up at any time, because I remember all this stuff, going years back. But we had this back at our last first major impulse off of the bear market lows, And this was when Bitcoin went from 3K to 14K. And you can see here that we just had this repeated buildup of these unswept higher lows. So you can see here, we had a key low here, we had a higher low, we had higher lows, we had higher lows, and then we impulsed. And then we had higher lows and higher lows, another higher low, a micro higher low above these ones, impulsed. And then we had this low, we had these lows here, higher lows right here, impulse. And so sometimes those obvious liquidity grabs just get front run, okay? And that's when the market's extremely bullish, as you can see here. And I think that's essentially what we're getting now, which is why I think that 62, 63K, which is the logical, ideal, perfect entry, may not actually get to us, okay? Now, aside from me saying all these things about whales absorbing, Bitcoin at these levels, do we have any proof that that's actually happening? Of course, right? Everything that I say is backed by data, so this isn't just conjecture. This isn't just what I am imagining to be happening. This is based off of the data that I'm seeing here. So let's take a look at that real quick. This is, again, Velo Data. Again, link is in my bio. I also have a tutorial here on YouTube, which I recommend watching if you're new to Velo Data. It talks about all these indicators, how I set up the chart, what these indicators mean and do. I recommend watching that if this is your first time using it. But let's go ahead and talk about what I'm seeing here on Velo Data, which is why I'm quite bullish here and why I think we may not actually get that 62, 63K. First off, let's go ahead and zoom out a little bit and let's take a look at our open interest. Okay, again, this is a metric that you guys know that I watch carefully. And I think it's very, very important, and I use it in a lot of my analysis. So open interest to start, we had, if you guys remember from my last video, we had that situation where we had that whale, right? We talked about that big whale that kind of longed on nearly $1 billion of Bitcoin here at 71K. And you can see that open interest actually, after these shorts were squeezed, it rose again because this big whale longed a bunch of Bitcoin here at the highs. So open interest had risen again by about 10,000 Bitcoin. And he had longed about anywhere from 7 to 10,000 Bitcoin, right? So the idea was that most of this new open interest that we had gotten off of these lows, most of it was attributed to this large whale, okay? He longed Bitcoin here, as we could tell, he longed Bitcoin here at 71K. And in my last market update, I talked about how we looked at the data to identify this was likely one entity and how we can see that he absorbed, 5,000 plus Bitcoin. That whale ended up dumping all that Bitcoin at these lows, okay? And we talked about that as well on Twitter. So you can see here that, let me actually go to the lower time frames. You can see here that this whale began limit selling his Bitcoin in 500 Bitcoin chunks. Sold 537 Bitcoin there, sold 250 there, sold 521 here, and you can tell that is selling. Sold another 800 here, sold 480 here, sold 1.5 thousand there. It's actually 2,000 there. Sold 800, sold 521. You can tell that this is him closing his longs because open interest is dropping on those sales, right? So what you have here is you have shorts covering into his longs closing, which causes open interest to fall. So that whale, we talked about how I've seen whales get hunted. I've seen whales that you'd think that they're smart because they're controlling $1 billion of money, unless it was hedged somewhere, essentially. And assuming that this was the same entity, which I do believe it was, then this whale or this entity, essentially bought the highs and then sold the lows, and now we're going up again. So the market has a way, guys. The market has a way of flushing these guys out. Okay, it has a way of flushing these guys out. And more often than not, you can't just assume that someone who jumps in with a massive position knows what he's doing and that we're going to go in the direction that you'd expect we do, because oftentimes that's not the case. And this was a perfect example of that. In any case, guys, that whale ended up limit selling his Bitcoin over here on this bounce. And you can see he got more Bitcoin filled here. And altogether, this was at least 5,000 plus Bitcoin that were exited here. And so you can see he sold some here, and then these limit sells disappeared here, and you can see here that open interest continued to bleed down as we rose here. So either again shorts covering or this guy selling his position, the last remaining, I think it was like 1,500 Bitcoin were left here, 1,500, selling that into these buys with like market sells or something. In any case, guys, the point is that that entire rise in open interest from this large whale completely wiped out. Okay, so essentially I believe that entity bought at the highs, sold to the lows, and now that he's out of the system and open interest has been completely reset back to before he got in, we are now headed up again. Okay, so that's a beautiful way of resetting open interest. I always talk about open interest resets, and people don't understand why. This is a beautiful example of why. Right, once open interest is reset and there's no one left to flush out in either direction, it makes price it makes sense for price to continue in the direction that it's intending to, right? So that's essentially what we have here. Open interest essentially reset from that entity. And if I go to Velo Data, you can see open interest is back down here. It's not at the absolute low, right? The absolute low is going to be down here at 147K. But it's fair to assume that some of these new positions may be lower leverage longs that really won't get squeezed out in any sort of a downturn, especially in understanding that we've seen, massive absorption at these lows. And so you're assuming that at the worst we get 62, 63, right? In the bullish scenarios, obviously. If a 10 to 50% move isn't going to squeeze down what's left of these longs, potentially longs or shorts, then this is sufficient in terms of a reset, right? It's not all the way, but it's close enough, and it's far enough away from the danger zone that I think this is considered healthy open interest now. Keep in mind, as we push up, we might even squeeze out some more of these potential shorts, and we might even see open interest kind of bleed lower as we run up. So open interest is now healthy. Okay, that was one of the conditions that I said in the video back when we were trading at these lows, and I was looking for these lows, and I was looking for a move up to red. I said two things. What did I say? I said, one, we want to see an impulse up. Two, we want to see open interest healthy. We got the impulse up. Open interest is now healthy. All the conditions that I wanted to see at these highs have now been met, which is why I now believe that this was likely our bottom. Okay, again, at these lows, I said we have to be wary of the resistance unless we get two scenarios that pan out. Two scenarios panned out, we're bullish. It's as simple as that, right? This is not about what I want to see, or I would love to see a dip back down here to load up on cheap Bitcoin, but this isn't about what I want. It's about what I'm seeing and what the data is telling me, which is it's time to probably be bullish now. Now, again, I want to talk. We talked about open interest being reset on open interest. We talked about the whale getting flushed out, essentially. I want to also talk about the absorption that I'm seeing, because I mentioned that seeing that absorption is one of the key things that makes me think we may not get 62 to 62K, right? The absorption, again, is what I'm talking about. The absorption that we're seeing at these lows, above these lows that we thought were going to get flushed, right? This absorption is what I want to talk about. So let's go ahead and close open interest for a second here. We will keep, this is perp CVD. We'll keep this here. We'll keep this here. We will also keep spot CVD, because that's the key one. And I'm going to go ahead and create, this is Coinbase spot CVD, this is Coinbase and Binance combined. I'm going to hide this one, which was just Binance. We don't really need to worry about this right now, and we don't need to worry about funding. So this is what I want to focus on here. This is spot CVD. This is Coinbase and Binance included. This is perp CVD, okay? Keep in mind that in the last video I talked about how we were seeing absorption, right? We were seeing absorption between this low and this low. What does that mean? Just to recap, you have price making a higher low between these 2 points, these two lows, while spot CVD is making a lower low. Okay, what this tells us, as I explained in my last video, is that we have spot sellers, more spot market sellers than market buyers here, which is why spot CVD has made a lower low. Okay, however, price has made a higher low. If you have more people market selling spot than buying, but price is making a higher low, what does it mean? It means that some entity is limit buying, meaning absorbing Bitcoin in this region, right? You have more market sellers than market buyers on this roundup, but instead of price making a lower low, price makes a higher low. That means you have limit buyers absorbing the market selling at this low. And that's why when we get a divergence, we can see that as absorption by spot players, okay? Now, we're getting that same divergence between this low and this low, okay? Once again, we have price making a higher low, while spot CVD makes a lower low. So again, we're seeing a mini version of what we saw down here. This was a big accumulation range. This was a smaller little accumulation area. But once again, we're seeing spot absorption into this drop to the downside, right? So remember I said that ideally we'd like to see a flush of these lows, and we'd like to be a buyer here, right? This is our ideal buy zone. But it may be that someone is front running the ideal buy zone and absorbing the sell pressure here to front run this level where they know a bunch of buyers will likely step in. And that is confirmed by our spot CVD showing a bullish divergence, right? You have more market sellers on this drop than market buyers on the rise, but instead of price making a lower low, it makes a higher low. That tells us that we are seeing absorption. So again, I'm not just saying that we're seeing absorption here because that's what I want to believe. I'm saying that that's what the data shows, okay? So the data is showing absorption here, then we're seeing absorption. Now, if I go down to the lower time frames, this is where it gets kind of interesting, okay? If I go down to the lower time frames, we have here once again another interesting thing to identify, okay? And I bought some Bitcoin at 67K for this reason, okay? So what we have here is we have a sweep of these lows, okay? And then we have what I was able to notice here is we have a key swing low here, some consolidation. We went below that key swing low, As you can see here, we went above it. Okay, this is what I had marked off as like a little range. Okay, so now what we have here is we have a sweep of these lows, pump up. We have a little range formed. We took the lows of the range, we made a higher low, and we pumped. What does that remind you of? Okay, that's that classic accumulation structure that we look for. We have a bigger version of it here, right down here. Okay, and so again, price makes the same patterns on different time frames all the time. Okay, our bigger accumulation. Okay, of course, this is the whole thing is really reaccumulation, but we had a nice little accumulation base here that formed, right? And we had that again, that same key swing low. We had the higher low, the lower low here, the deviation. We had the higher low here, and then we saw the impulse, right? And again, here we saw the absorption, right? That we'd like to see in an accumulation bottom. We have the same thing happening here on much lower time frames. Okay, remember this pattern? You have a low, lower low, higher low with absorption, impulse. Okay, on the 5-minute time frame, what we have here is the same idea. Okay, you have an area of demand right here that was formed. Okay, so I'm going to go ahead and mark this off, area of demand. And what's actually interesting is I'm going to zoom out a little bit more. Go back to the bigger time frame. What we have here as well. Remember, this is an area of demand, right? We pushed into this area of demand. Okay, so we have an area of demand formed here that we tested as well. But going down to the 5-minute time frame once again, what do we have? We have an area of demand formed, and then we have an accumulation base formed on top of that, right? We have a low, lower low, higher low, with absorption, right? Absorption going on here as we proved and verified using our data. There's the absorption, and then we have a potential lower time frame impulse starting. Okay, now this is a little bit early to tell if this is the start of that next leg to the upside, meaning is our subwave 2 already complete here? Possibly. And if that's the case, then the next impulse is literally already beginning, right? Now, like I said, it's too early to tell, but the point is that if we're going to avoid sweeping these lows, then this is as low as we can go without sweeping these lows, right? So if we really are front running these lows and front running the ideal area of interest, then it makes sense for this low to be defended, right? And if this low is going to be defended and we now have a low time frame accumulation base, then it's possible that this was our bottom of the wave 2, okay? And now we're just looking for impulsive price action to the upside, meaning we're looking for, again, like we identified here on the higher time frames, we're looking for a little small 5-wave impulse to the upside, okay? If we can get another impulse here, then we can confirm that this major third leg has started, right? And this is the first impulse of 5, okay? And that tells us that we're well on our way to 100K plus, okay? Now, from a pure PA perspective, we are now approaching an area of, I'm going to go ahead and remove this resistance zone because we've been shopping about it for a while. And I'm going to re-highlight this zone here as resistance, okay? And I do that because this is the area from which we broke down on the lower time frames. Let's go ahead and mark this off. So you can see here that we consolidated and then we broke down, right? So this is the immediate area of resistance that we need to be wary of. So the bullish scenario has us having already put in our low for the wave 2 here. Okay, that's the most bullish scenario here. And in that case, this area should offer little resistance. However, if that is not the case, then we will likely reject in the red zone here and come back down and then obviously break these lows and then fall. So we're really here at a moment of truth. If we get past the red zone, okay, and ideally, again, it should be in a clearly impulsive manner, then once this red zone is reclaimed, you can consider it flip to support, and at that point you're looking to identify an entry if you haven't gotten one already, where we potentially see an impulse to the upside, and then you're looking to get in on the subsequent retracement before the next impulse. And that ideally that retracement tests this logical area of support. This is how we put all these things together to get an entry. And you have a stop loss here at these lows, you have an entry here, you manage your risk, and you ride to the upside. But this is key here, is getting past what is currently resistance. I've made it green here to indicate it will be support once it's flipped, but right now this zone is currently resistance, so we're not 100% confirmed yet, right? We have a lot of signs here, but we're not 100% confirmed yet. We need to flip the red zone to really get things going here. Another thing that we can also watch out for is if we start moving up, but it's not in an impulsive manner, meaning we just kind of grind choppily up without impulsive price action, then what we could be seeing here, even if we make a higher high, what we could be seeing here is that this wave 2 that we are talking about, the low may be in, but the wave 2 itself may not be complete. And what I mean by that is that this wave 2 may be forming in what we like to call an Elliott wave, like a running flat, okay? Again, if you're not familiar with LE wave, this just means it's a corrective structure that actually puts in a low, makes a higher high, and then makes a higher low, and then we impulse, okay? So we may not, in that case, start seeing impulsive action until we've completed this correction. This means a choppy grind to the upside, kind of some more chop consolidating, ideally flipping the red zone to support, and then possibly the impulsive price action starts, okay? So we're looking for impulsive price action, which may not be clear off the initial move if this is still corrective, but that doesn't mean the low may not be in, right? So guys, all things said and done, this is the bullish scenario that I wanted to talk about here, and we are waiting for a bit more in terms of confirmation, but things are looking really good right now. I do think that more likely than not, the bottom is in here at 60K, and we're now headed to 100K plus. The bearish scenario, obviously the one that invalidates everything that I just showed you guys here, is a move below 60K. And those are the only two real scenarios that I'm thinking we have to worry about right now. But a move below 60K, and that invalidates the bullish setup here. At that point, we can certainly go back below 56K. I'm not saying that it's necessarily likely, but we could. But until then, as long as 60K holds, I think that the correction is complete. I think we're headed to 100K plus. I want to show you guys a few more things, so don't leave just yet. But again, if the lower time frame scenario doesn't play out, where this is our lower time frame base, and we get through red, let's say we reject that red and we retrace and we take all these lows and we push into this zone here, then that just means that, again, it doesn't invalidate that this is still the origin of the impulse. So that just means that the wave 2 went deeper, that we got the perfect ideal entry, which again is a no-brainer long. So that doesn't change the fact that we may still be seeing that that impulse to the upside, and it may have already started here at 60K. Now, this scenario, how does this happen? Well, the guys that are absorbing the Bitcoin here, if the sell pressure for whatever reason is too strong and they can't absorb it all, then we break down, right? Obviously, it's supply and demand. But as it stands, they've been able to absorb all the sell pressure thus far, and if no new sellers step in, then odds are that this is not going to happen, right? So it's simply a game of supply and demand. There's no guarantees here. So while we're seeing absorption at these zones, that doesn't mean that we can't see some sellers step in and then sell pressure increases greater than the demand here, and then we break down. That's not impossible to happen. But as it stands, that right now, thus far, the demand outweighs supply at this level of 67K. So that is what I want to talk about on the lower time frames. Now I'm going to show you guys one chart. I'm going to zoom out. I'm going to get rid of all the lower time frame stuff. I'm going to make this very simple, as simple as I can, to show you guys why it makes sense to be bullish here and why I think that this reaccumulation phase that we've been in for months is now complete. So let me go ahead and I'm going to look for ideally a blank chart. And this is going to be for the guys who are holding spot and are not actively trading and who shouldn't really worry too much about the lower time frame stuff. This is for you guys, and also good for the guys who trade too, but this is good for the higher time frame outlook to keep in mind where we are, okay? And this is what I want to show you guys. Okay? This is what we have. You take out all the lower time frame stuff, and this is what we have. We have a massive impulse. We have a correction, consolidation, sideways price action, ranging, accumulation. We then have a very clean high time frame accumulation base. We have a low, we have a lower low, we have a higher low. We then have a very cleanly identifiable impulse, okay? Invalidation, again, for this idea is here at 60K. As long as 60K doesn't get hit, this is what's going to happen next, okay? This is what we're looking at next. And this is a push to, again, I think 90 to 100K reasonable within the next month or two, because this is going to happen quickly. We had a $10,000 move from the 10th of May to the 20th of May. In 10 days, we went up $10,000. These corrective structures, we don't know how long they're going to take to play out. But again, these ones back here, this was January. This was, what was this? January 30th to February 6th. This was a 7-day correction. This one is 15th of February to 25th of February, a 10-day correction. These should be similar in size, okay? So what we're looking at here, the correction for the wave 2 thus far is 21st of May to 24th. That's been 3 days, okay? So yeah, this could go on a little bit longer, okay? At the end of the day, though, as long as we don't hit 60K, what's happening next is another $10,000 plus move to the upside. And that's likely to take as much time as this one did. This one took from the 10th of May to the 20th of May. So let's say that this correction goes on till, what is this, 21st of May? Let's say it goes on for a week total, 29th of May. This next leg up takes the same amount of time that this one took, which, again, these are estimates. It doesn't have to take the exact same amount of time, but this took 10 days. So this is the 30th of May. So by June 10th, maybe this one's complete, okay? Then another 10 days for a correction, June 20th, okay? And then the fifth wave by June 30th, by the end of June. We're in May right now. By the end of June, in 1 month, we could be at 100K, Okay, that's how crazy this thing is. And you guys think that sounds crazy, but this impulse went from the 25th of January to the 13th of March. That's about a month and a half. A month and a half for a $30,000 move. And I'm saying that our next move is probably going to be similar in size and going to take about a month. That means by the end of the end of June, we may be at 100K Bitcoin. Okay, and that is exactly what I've been saying for literally weeks, if not months now, about how quickly we're going to accelerate to the upside on this blow off top, how quickly things are going to get, how aggressive things are going to get towards the end of this cycle. You thought this was bullish. You haven't seen bullish yet. These moves are only going to get bigger, stronger, faster as we approach this final blow off top. So when I've said in a previous video, which you can find on YouTube as well, that I expect that our top for this cycle on Bitcoin likely comes in somewhere in October, and I explained that in that video. And I had people asking me, well, have you changed your mind based on, this consolidation is taking a long time? Have you changed your mind on that? I have not changed my mind on that. Why? Because again, I expect Bitcoin to top somewhere between 100K and 300K max, obviously. But if we're going to be at 100K by the end of June, then we have July, August, September, October, 4 more months to go. If we can go up $30,000 in a month and we have 4 more months to go after this move, you can see how we may be done by October, right? And again, we're going to get some consolidation phases like this one in this move to the upside, but they are typically going to get shorter and less time consuming as we push up, right? So we can certainly be done with Bitcoin by October. That gives us 4 months after making this move up to 100K. And if we're moving up $30,000 in a month, then we can certainly get to 150K by October, easy, right? Based on just what I'm showing you guys here. And this will become more concrete. You guys will start believing this more as we move up this next month or so. But yeah, zooming back in real quickly, massive accumulation base after months of reaccumulation. We are now essentially retesting the range highs of this accumulation zone. And if all works out as planned, 60K was our bottom and 100K is next within a month, maybe a month and a half, I would say. So yeah, that's it for this video update, guys. Again, if you liked it, if you enjoyed it, please like and share. I do appreciate it. All the tools that I use, including Velo Data, the heat maps, everything that you've seen in this video can be found in the link on my Twitter bio if you guys are interested. Some of it is free, some of it is paid. Using my links gets you some sort of a deal or discount in one way or another on the stuff that is paid. And the stuff that's free, I do appreciate you guys using my links regardless. As always, guys, I hope you guys enjoyed the video, and I will catch you guys in the next